All right, welcome everybody. Happy Friday, May 21st. How's everyone doing? It's Dr. Keith here. Hope you're all having a great week. So a couple things before we get started here. Hopefully you can hear me okay and see my slides. It says Dr. K using Heikin-Ashi. If not, let me know. But I held a webinar, I don't know, it might have been a couple months ago on Heikin, or maybe 3 months ago on Heikin-Ashi. And the popularity of it, from my own standpoint, is something that it amazes me that everybody uses it, but of course I'm biased. But because of all the popularity, I wanted to hold a second session here. One, I'm going to go over how I use Heikin-Ashi, give you some examples like I normally do, and then really open it up to any Q&A if you have any. So it's going to be a little bit informal today, probably about 20 to 30 minutes of looking at charts and slides, and then again I'll leave it to see if there's any questions, and there may not be, but I figured I would do that because I do get quite a few questions every week on Heikin-Ashi, and 99% of you absolutely love it, have found that it's really a fantastic tool that once you're in the trade, when is it time to exit? Because most of us, that's what, no matter who we are, everybody struggles with that. And if you have specific rules, it helps you sleep at night. And what I have found is from trigger to Heikin-Ashi turning colors on me, I've made about 80% of that entire move, which what you don't know going into it is how big is a move going to be, right? So if you can make 80 to 90% of an entire move of a stock, of a futures or a Forex, you're all going to be extremely happy. But what it really does is, hey, Bill, what it really does here is it gives you some very basic rules for something that works extremely effective. And that's where everybody can use it, in my opinion, okay? Because again, I don't care how experienced you are. We've all left money on the table. We've all gotten out too early, or we've exited too late. And at least by having something I'm going to present today, some specific rules that have been highly effective to basically grab around 80% or higher of the total profits available, is something that, again, is very exciting to me, okay? So before we get started, again, just go ahead and meet a lot of new folks in here. So let me explain a little bit about myself. So I've got my PhD in finance. I've been a trader now for over 15 years. And I trade all three markets, meaning futures, Forex, and stocks, okay? And most of my stock trades are via options. But I started out in the futures market using seasonality, and over the years have migrated through all three markets because there's great moves in all three markets. So I like to use my techniques to trade in all three markets. I live in North Carolina, and again, one of the reasons that I've originally started trading is for lifestyle. I want to have flexibility in my schedule. I want to be my own boss. And I want to be able to have this webinar today, and then for the rest of the day, spend time with family. That's what I do. So anyway, that's a little bit about myself. Before we get started, again, just read the notice. Typically, you'll see this in webinars because unfortunately, most traders don't do well. And I'm not afraid to say that because I've blown out a couple accounts early in my career, like most of us. And what it really comes down to is risk management. If you're going to lose sleep over one trade, you're putting too much into that one trade. Easier said than done. But if you're looking to really be successful at this, you need to size appropriately every trade you do. And then that way, if you win more than you lose, you're going to build that account up. Okay, so that's very important to me to bring that up. And again, today we're going to talk about Heikin-Ashi. Bruce, I'm in Tryon, Tryon, which is about 45 minutes from Asheville. Beautiful horse country here for my family and I with our horses. Yep. We're going to talk about Heikin-Ashi today, though. So Heikin-Ashi, again, as I mentioned, is one of my favorite tools, if not my favorite, in conjunction with using seasonality. And I'll have a special offer at the end for you. Okay. So just wanted to start out by adding this slide in here. So the picture on the left here, over here, is traditional candlesticks. Okay, so you have the open and the close, the open and the close. So right here you have a red candle, which means price went lower, right? And then so in a series of an uptrend, you're going to get those. And at times, like maybe right here. Okay, as a trader, if you're long on this particular underline, and right here, you're like, man, this might be the top. Okay, you get out. Okay, well, you don't know at the time. Maybe it is. Maybe it is the low. We just don't know at this point, right? So, what I've always liked to do is let's find something that will basically put your arm around me and say, Dr. Keith, just relax. Because in many cases, what happens here is you're going to overreact to one day in price, right? We've all done this. Okay, so again, I'm not criticizing. We've all done it. We've all had days in the market where you exit, sorry about that, where you exit a trade and then it goes much higher or much lower if you're a short, okay? But then here on the right, okay, these are Heikin-Ashi candles. And what I've done with the program it is, and again, I'm going to go and show live charts and all that good stuff for those of you that are new to this, is the white bar here is the actual price of the open, of actual price. The red is the close. Yet you still have the Heikin-Ashi bars. So you can look at Heikin-Ashi and you see how bullish these candles were on this instrument. This was Home Depot, by the way, okay? But if you're in this trade, so let's say you took the trigger right here off this oscillator, okay? Look at the green, okay? Look at the green, look at the green, look at the green, look at the green, right? There's really no reason as you're checking your charts every day. This is a daily chart. Yes, you can use all time frames, but there's really no reason to exit the trade, okay? Where on a pure price chart, you may have had some reasons here to think this could have been the bottom. And again, maybe it is, but with Heikin-Ashi, which I'm going to explain a little bit about how it operates, okay, it is much easier for most of us just to look at a chart and say, hey, as long as this is green, why the heck am I going to exit this position, okay? And then, right here, we started getting the red, okay? And I've done some other things to make it even easier, but I just want to show you big picture, okay? I used to use Heikin-Ashi all the time, and the one thing I didn't like about it was it never showed me what actual price was doing when I looked at charts, okay? And so again, with technology and programming, I said, you know what? I actually want to see what the actual price is doing too. So I created these lines in the charts to show me. So I can see at any given point on this daily chart or whatever time frame you want, the white is the open and the red is the close, okay? And you can see, there will be times where right here, actual price closed lower, but Heikin-Ashi stayed green, okay? And that's what I look for, is those type of variances, okay? So again, let's kind of talk about what Heikin-Ashi is. And again, I know you're all, very good at learning on your own, watching videos and so forth. So I'm not going to get into too much detail about calculations of Heikin-Ashi. My background is finance professor, teaching people to trade. And I like to keep it super simple. Okay, so if you're an engineer, God bless all of you engineers, that you want more calculations, you can definitely find the calculation. It's a very simple calculation, but very powerful. Okay, so the Heikin-Ashi technique averages price data to create the candlesticks as you see. And then let me back up for a minute. By the way, with these Heikin-Ashi candles, just like if you've learned how to read regular candles, when you see very solid green colors here, okay, that's a bullish Heikin-Ashi candle. So there's no reason to think during those bullish candles that we're getting ready for reversal yet. Okay, so you can read the candlestick the same as a traditional, right? The difference is the formula, okay? The formula of which is which, okay? So instead of using open, high, low, and close, okay, like standard candlesticks, Heikin-Ashi uses a modified of two moving averages, okay? And what does it do? It gives you a smoother appearance. It's kind of like I shown you in that example of Home Depot, okay? It certainly makes it, in my opinion, much easier to spot trends and reversals, and also, gaps. If you have a gap because of earnings, for example, Heikin-Ashi will still be smoother on your charts when you're looking at it. Okay. And again, most of my charts today, at least in my initial presentation, in fact, all of them are going to be on the daily, but you can use these on any time frame. Okay. Many day traders use, tick charts on Heikin-Ashi, swing traders on 4-hour charts, and so forth. My favorites are daily, 4-hour, and 5-minute, because that's my lifestyle. Okay. Mainly 90% of my trading is swing trading. Okay. But when I'm day trading, I'm absolutely using Heikin-Ashi. So because the Heikin-Ashi price bars are average, they don't show the exact open and close prices when you look at the, when you go back and you look at this, right? Again, I've had a program that it'll show us that, but the actual Heikin-Ashi doesn't tell you that. Okay? So it can be deceiving if you're looking at charts, right? You could have a green Heikin-Ashi, but price actually went down. Okay. And that's where, having the open and close on those, if you really like Heikin-Ashi and you want to use it, or you're using it and you want to actually know what the actual price is doing, okay, it's very, very cool that we have the price lines for you now. All right, so let me talk about a couple simple strategies here, and there's so many of them. The bottom line is you don't have to over-engineer it, okay? So one idea is you can plot a 20-period EMA and a 50-period moving average, okay? And use that as your bias of your trend. So if the 20 is above the 50 and you get a green Heikin-Ashi, right, that could be your long opportunity, okay? So again, if price is above the moving averages, you look for longs. If price is below, you look for shorts. You do not have to overthink it, okay? What I like to do is I like to then scan every morning, which I'll show you how I do it, for these opportunities of change in direction. Okay. Again, gotta love technology, right? And again, you can use any time frame. Okay. So I keep saying that because I'm always going to get emails after the fact. Does this work on a tick chart? Does it work on 5? Does it work on 15? Absolutely. Okay. Now I specialize in daily, 4-hour, and then some day trading, shorter term. You can use any time frame you want, because again, it's just averaging those prices, keeping you in those trades longer. It's basically telling you, just relax. Let's see what the next one opens up at. Let's see where we're at, because we all know the market doesn't care about giving us breaks, right? It's not going to say, well, Dr. Keith's down today, so let's save him some money. That's not how the markets work. So when you get a trade and it's working in your favor, you want to maximize that trade. Okay. When I have some people I mentor come to me and say, I made a good amount, so I got out. Honestly, that irritates me, because you can make more. And if you get a few of these quote unquote runners a year, that's how you can really build up your account, folks. Okay. So don't be happy with just a certain amount. As long as the trend, Heikin-Ashi is in agreement, okay, stay in it as long as you can. Maximize your profits, okay? So again, what I did, I showed you, is the white bar here. This is a Heikin-Ashi candle, but then I had a program to have the actual open of price and the close. So on an intraday or on a candle itself, the current candle, this red line will move with price, right? Because it doesn't shut down until the end of whatever that period is, okay? And then I just created, again, I'm a visual person, that's my background. I like things super simple. So then I've created some dots to tell you that if you're in the trade, basically stay in the trade until it either turns yellow or red, which I'll explain, okay? So like, boy, Dr. Keith's got his PhD and he's painting colors, right? Absolutely. Right, so what I love to do, first of all, is I love to scan for these trades. So I've created a scan that's going to show me, as an example, yellow to green. Okay, and this was in the futures market, just as that's what I have it labeled. Okay, but this is actually, obviously, these are stocks. But so it's telling me when I had a dot, Heikin-Ashi dot, which I'm going to explain. It'll all come together here in a few minutes. Went from yellow to green. Okay, that way it's a potential reversal, right? So then I want to look at the chart based on my certain rules that I use to see if it's ready to get into that trade. Okay. So let's go to the charts. most of you know I don't like to do too much PowerPoint. I like to go right into the good stuff. Okay. And again, if you have any questions, I will definitely pause and answer questions as well. Okay. Okay, so I brought up Home Depot. That was the example because everyone heard about lumber and the move up in lumber, and Home Depot is one of those that obviously definitely can move with as lumber, right? So my trigger, I like the Laguerre RSI, but again, today you can use any oscillator. Okay, but the bottom line is right here, Heikin-Ashi turned green. Okay, you see the green candle. Okay, so it was coming down, and this is where a lot of traders struggle is they try to pick bottoms. Okay, and what I recommend is let the system kind of tell you when. And so when you get like an indecisive candle, I don't count that. Okay, use Heikin-Ashi just like you use regular price candles as far as when you're analyzing them. So this was pretty solid red, still red, and then you have your reversal right here. Okay. What I liked about this was we also had the Laguerre trigger right here, okay? But what I like to do is I like to wait most of the time for that second green Heikin-Ashi, okay? Once that second green Heikin-Ashi closes, that's my entry, okay? So what I've done was I created just here so you can go back and review and back test your work, okay? When it's red and then it goes to yellow, yellow's an aggressive entry long, okay? Because it's only the first green Heikin-Ashi. But then the green dot is when you have two painted green Heikin-Ashis, okay? So if you're in this trade though, here's how easy it is, folks. You stay in the trade until you get a red dot, okay? When is that? Right here. So if you got into this trade on March 8th, you exited on April 23rd, and you can see you made roughly 80% or so of that entire move, okay? Instead of saying, you know what, I'm at 290 now, I'm happy, or I'm at 300, we don't know. Nobody knew at this point how high Home Depot was going to come. And maybe it would have just went to 280 and then turned back, and you would have got out and made 80% of that move, okay? But again, the biggest takeaway I want you all to get today is you should not ever be happy with just taking profits because you're happy. Be happier. Stay into the trade until we have a legitimate reason to exit that trade, okay? That is super critical because that's how you build accounts. It's the big winners, okay? This is pretty easy. If we got in here, you put your stop right here below the wicks. If it doesn't work out, you're out. If it works out, now you have a plan. Now, as far as strategy, I don't keep 100% of my trade all the way till the end, okay? I do take partial profits and all that, okay? And again, this really isn't a strategy session of how I enter and exit my entire trade. But what I like to do generally, if it's an option play at about 50% profits, I take half of my trade, keep a stop at break even, and then I let the rest run until I get a red dot, okay? That's how easy my strategy is, okay? So again, this is the daily chart, okay? But you can use any time frame you want, okay? So here's one like ALXN, okay? You can see here that we had a trigger right here. You went from a red, which the scan will pick that up, and I'll show you the scan in a minute, to a yellow, back to a green. Okay, so the moving averages, the smaller one is above the larger one, right? I made it thinner and thicker. Okay, and so now you're in. If you're in this trade right now, you see how you still have green dots, right? Green Heikin-Ashi. You can stay in this trade at this point. Okay, look how solid today's candle is. Okay, so even though, as of right now, the white line is the open, the red is the close. Okay, so we're actually down, what, 52 cents on ALXN? But Heikin-Ashi is saying, just relax, Dr. Keith. This is still a bullish move. Okay, that's the power of Heikin-Ashi. We don't know. This could turn right over now, and we could get out. I mean, one thing I'm very careful of is new highs. I protect myself because at some point a new high is going to be the high, right? But generally speaking, from Heikin-Ashi, there's no reason to exit this trade yet. Okay, just like the Home Depot, you don't know when it's going to be. It may be 2 days from now. It may be next month. It may be next year. You just don't know until it tells you. So stick into that trade. Okay. All right. So the lower indicator, let me just bring this up for you all. So this right here, this white dotted line is just an oscillator, okay? you can use any oscillator you want. You can use MACD, you can use traditional RSI. I like the Laguerre. This is what I've customized. The Laguerre is not something I created. I've just modified some things to it. But the dots is what I've created, which again just shows you when you've got Christmas lights going on, yellow, red, right? That's consolidation, stay out, okay? But if you're looking to take a long play on this, I wait for a red dot. It'll turn a yellow. It always has to turn a yellow first, because what the yellow is a change from red to green Heikin-Ashi. And then if it confirms that second Heikin-Ashi, then it turns green, okay? So again, I've just created something that I can visually see. And if, let's say you're like, well, you know what, Dr. Keith, I like Heikin-Ashi, but I don't want to have Heikin-Ashi on my chart. You can actually just use the Heikin-Ashi dots down here and keep regular price if you prefer that, okay? So it's just whatever preferences you have, okay? All right, CHS. So again, I just tried to pick some recent ones, show you that you had a Laguerre trigger here. Bottom line is you went from red to yellow to green, okay? I still like to wait for an oscillator to tell me to go in, and then here it was, okay? So you got in at, let's say, $3. But again, here's what I want to show you. You don't know how high this is going to go, okay? So you would have taken some partial profits. So you don't want to turn winners into losers, folks, okay? And then, you're still in this trade with Heikin-Ashi, green dots, okay? One thing that will concern me a little bit from price action, the Heikin-Ashi is very, very tiny now, okay? But again, I've already would have taken partial profits on this. Again, this isn't a real trade I did. I'm just showing you. But if I did, I would have already taken partial profits. And I do like to wait until I get a yellow or a red dot, meaning two red Heikin-Ashis, because at this point, we don't know if we're at a top or not, okay? We don't know. So you might as well try to maximize the market. When opportunities arise like that, you do not want to just go in and get out too early. The white line is just a Laguerre RSI, okay? But again, don't get caught up on that. That's what I use. You can use any oscillator you want. The Heikin-Ashi dots is what I created to kind of show you once you're in the trade, like if we're in this trade, right, I'm going to stay in until I get a yellow or a red dot, usually red for me, okay? All right, CNC. And yes, I'm purposely showing you runners right now because that's the goal. You don't know when they're going to be runners, but when they are, you want to maximize, okay? So CNC, again, we had a trigger right here, green Heikin-Ashi dot down here, the Laguerre trigger. Why would you exit this yet? See how bullish these Heikin-Ashi candles are? We don't know when the top's going to be on this. Let's not try to predict it. Because what's going to happen is from entry, from green dot to red dot, you're usually going to make about 80% or more of the entire move. We don't know if that move is going to be 4 days, 2 weeks, 2 months, a year, but you're going to make roughly 80 to 90% of that entire move, folks. That's why you want to stay in it, okay? NLOC, one of my favorites of the year here. So we also had a combo trade here, but the bottom line is, again, as it hits new highs today, green dots, green Heikin-Ashi, there's no reason to exit that entire trade, okay? There's no reason. Don't say, well, I hit a new high, I'm happy. Well, what if this goes to 40? What if it goes to 30? What if it goes to 100? Okay, you just don't know at this point. And in a couple of days, if you get a red dot, it goes down, you get out, let's say you get out at 26, still a nice trade. You made 80% of that move, right? And I'm showing a lot of stocks. Again, this is the same with futures and Forex. So GFI, right? Here you go. Down here you have in this case, the red dots that went to yellow, back to green. So then I'm waiting for my entry. You can go in right off a green dot with Heikin-Ashi, absolutely. Okay, I do prefer the Laguerre as well to agree. So I would have got in right here, the next bar, and you would still be in this trade, okay? Now, one thing I do, I created a scan as part of this package, okay? where it's basically going to be, let me bring it up. It's going to be called yellow to red or yellow to green. So let's say I'm looking for yellow to green dots, okay? Let me just get rid of a couple things for right now, just to keep it simple. Okay, so I'm looking at all stocks. I'm gonna change this to, you can do whatever you want. You can sort anything you want, but let's do weekly expirations, okay? So what I'm searching for right now, we'll see if there's anything off the daily. These are stocks that had a Heikin-Ashi color change. Okay, so let me bring one up, like ACN here. Okay, I'm just going to bring it up and show it on my chart. So you see how it went from yellow to green? Okay, these are my bullish signals. I'm like, okay, this is an uptrend. Okay, is this an opportunity for me? Okay, now we have a green Heikin-Ashi. Okay, so if I was going to get into this, I would stay in at least most of the trade until I got a red dot. Very, very effective, simple rules. Okay, you can go back to scan. You can look at any of these. You know, let's look at BMY. Okay. Here, you went back from yellow to green. You were probably still in this trade though, because you never got a red dot. But if you did get one, you know, here's where I'll look at this. Let's say I wasn't in this trade. Okay. Even though it went from yellow to green, I'm not getting in this because we literally just get highs. I want more room to run. But the beauty is you got all these to look at. And this is off the daily. See where it says D for daily? You can change that to a 4-hour, 5-minute, whatever you want based on your trading preference. You can change that and just hit rescan, and it's going to do it based off the time frame that you put. Or let's say you're like, you know what, I just want to know about futures. So I'm going to go to public, click on futures, hit scan. Let's see if there's any daily triggers. So the ES and the NQ, okay? So you can bring that up. Right, this is the ES S&P 500 futures. You see it went from yellow to green, okay? Yellow to green. So if you're looking to resume that uptrend in the S&P, right, Heikin-Ashi in the Laguerre, everyone's saying now's the time, okay? Pretty cool. Okay, so that's the scan. Again, it goes both ways. Let me just show you. So then you can also do, instead of yellow to green, you can do yellow to red. So those of you that are looking for plays to the downside, it does the same thing. Okay. All right, so like Domino's Pizza. Let me bring up Domino's Pizza. You know, this is something that happened back here in March. So on March 9th, we got, again, as you're falling down here, folks, okay, here's the beauty. You don't have to overthink when the bottom's at, okay? Heikin-Ashi with a good oscillator will do that for you most of the time. So in this case, right here, you can see it kept coming down to hit a low. And then you got this consolidation, indecisive candlestick, right? Heikin-Ashi candlestick. And then the next one was nice solid green, okay? So there's your entry. The next candle, you got a green dot. This is your entry, okay? The beautiful thing is, again, if it doesn't work out, you have defined risk here. You know, if you were like, okay, if I'm going to have my stop at the low here, if that's too much risk, right, then you can always tighten your stop, but just realize the tighter your stops, the more you're going to get stopped out, right? Or if it's too much risk, you don't take it. This is just one opportunity, okay? But then if you took it, right, here's what happens. You're in the trade, you're in the trade, you're in the trade. Oh, red dot, I'm going to get out. So let's say you got out right here. How can you re-enter? Well, if you really like the stock based on your analysis, okay, and I use seasonality in conjunction with this, okay, you just wait for it to turn back to green. So 2 days later, in this case, off the daily, there you have it, okay? And now when you exit, look at down here, green, 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 yellow. Again, stay in these yellows, especially when you're up. Green, 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 green. Right here on May 12th was your exit. So you see how you made around 80% or greater of that entire move? That's what you got to, for many people, including myself in the past, that's what you have to reprogram yourself. When you hit it right, keep hitting it, okay? Keep hitting it. Don't be happy because of a certain move. Here's a British pound yen. I mean, those of you that trade Forex, I mean, Forex has some phenomenal trends, right? You know, so, you know, you can see we're in a nice uptrend. The moving averages are widening. So let's say right here, okay, this would show up on the scan when you went from yellow to green, right? This is your entry on the British pound yen, okay? You're like, yes, I love the moving averages on top of each other. So look how long this keeps you in the trade. Green, 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 yellow, yellow, green, 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 all the way to right here, okay? So if you got out at roughly 150, you get in at 139, right? Let's call that over 10,000 a contract, okay? Unbelievable. But again, what just as important, you don't have to overthink it. Once you're in the trade, once a day you look at the screen, see what color it is, okay? Or if you're trading smaller time frame, let me go to like a 4 hour. Okay, those of you that like trade smaller time frames, okay? Right, you just wait for the red dots here, okay? And if you're in an uptrend, I prefer only trades in that direction. I ignore the short plays personally in a trend because there's so much to trade, okay? Here's a lumber example, just like Home Depot, right? And this was a alert service trade I did on lumber. I mean, look at the beautiful move on lumber, okay? That is a historical move. And the beautiful thing about this was, once you're in this and you see these bullish Heikin-Ashi candles, okay, look at that. Now, I made a fatal mistake on this trade because I'm human too. This is my original profit target. See that? So I took half of my position off. Made a ton of money right up to here. Okay, and then it kept going. And right at this candle, you can see I moved my stop 2 candles down because lumber's thinly traded and I didn't want to get a gap down on me. So it basically came to the 2 ticks below me, knocked me out, and then it kept going. So I should have had more room on this because I didn't have a red dot. Okay, I didn't have a red dot until right here. Okay, yes, this was a great move, but even I didn't follow my own rules because I had too tight of a stop. I could have almost made another third of the move. Okay, that's the beautiful thing about Heikin-Ashi though. I mean, look at how solid these candles were. Okay. All right, wheat. So same thing here on wheat, and just showing some other things other than just stock plays. Okay, you got a trigger, you got the green dot now, you know, and look at the move up on here. Okay, I know many of you with a big wick like that, you know, many people, you know, big wicks usually do mean blow offs. Okay, but then the next candle and was red, and then you got red dot right here, so then you exit. So you basically exited at 729, let's call it. Okay, let's say you got in right here at 631. That's a tremendous opportunity, but just as importantly, and I know I keep repeating myself on purpose, okay, you don't have to roll over trying to figure out decisions. As long as it's green, you got your green dots, there's no reason to exit that trade, okay? Okay. The other thing I look for is if I'm trading something, let's just bring up another stock. Like, in fact, why don't somebody type in a stock you want me to look at? GE. Okay. So the reason I wanted to do that was when stocks are consolidating like this, okay, I call it Christmas lights. When you get like, you look, because remember, nice thing about the dots, you can look at the history, right? That's why I've created them. So when you see Christmas lights, yellow, green, red, okay, I'm going to something else. There's so many opportunities, folks. Stay the heck out of it, okay? At some point, it's going to break out, but wait for it to break out, come back, and then you can take the higher low, right? But don't try to trade this. This is ridiculous, okay? So thanks. That's a perfect example, okay? Yeah, Apple. Right, so Apple had a long trigger. If you're looking to go Apple in April, right, it picked basically pretty close to the top here, and then if you were shorting it, you would have got out right here on the short side. But, again, when you start getting the moving averages crossing Christmas looking lights, like at this point, you just got to be careful. I have a longer term play on Apple right now. I took it based off of a 4-hour entry, I don't know, about a week ago now. Okay. But, this is one of those examples where there's better, as of right now today, there's better opportunities out there. Okay. Broadcom. You can see here that if you're in this now, you have a rule, right? Stay in it. You don't know how long it's going to. Here's an example where today it opened here and at current prices right here. So price is actually down a little bit, right? $1 something. But what's Heikin-Ashi saying? Stay in there. Look at that nice solid Heikin-Ashi candle. And again, nothing's guaranteed, but it helps your decision making very easily. Okay, that is a bullish Heikin-Ashi. There's no reason to exit this trade. There's no reason. Okay. So let me just check, see if there's any questions. Oh, Mike, yeah, you're very observant, Mike. That's just something that I haven't released yet. The strong will is sentiment. Okay, I created a sentiment on what's important. What's important to me. So anyway, that's coming. That's coming. Very observant, Mike. All right. So any questions? Again, I wanted to leave some time. If not, we can certainly end early as well. Some of this is going to be review for you all. But are there any questions? I'm going to go back to the PowerPoints for a minute. So basically what I'm doing, folks, I'm doing a special offer here. And I'll put it in the chat. It's also being recorded and will be sent out with a recording. But basically what you're doing, I'm giving you a crazy special for $5.99 where you get the scan, okay, and the Heikin-Ashi that I'm using for $5.99. And just to kind of show you again, you get the Heikin-Ashi dots, okay, and you get the price candles where it shows you the open and the close with the Heikin-Ashi, okay. Heikin-Ashi is not something that I created, but I just put the actual open and close. I think it's super helpful. And then obviously the dots so that you can go back and look. And when you're in the trade, it then helps you stay in that trade, okay? What's coming with that special is you're gonna get 30 minutes with me to, if you have questions installing anything super simple with Thinkorswim though, or you wanna talk strategies, I'm putting that out there as well. So, that's the plan, is give you guys a really good discount so that you can use these tools and stay in trades. I love getting emails from you all saying how well you did, again, of staying in the trade. Once you've executed it, it's super simple for you to manage that trade. And typically that's the most difficult, right? Okay. Yeah, if you're looking for the Laguerre, if you go to my website, I've got that as well. So if you just go to seasonaltraderpro.com and click on TOSS, I'll show you. TOSS right here, seasonaltraderpro.com, and click on TOSS. You can see right here, LRSI with the script scanner, which will show you when things trigger. Okay, I didn't create the Laguerre. I just created the script scanner that shows it up. Okay, so seasonaltraderpro.com. I'll put that in the chat box as well, so you can browse through and so forth. Okay. So any questions? By the way, on my last page here, folks, this is my cell phone. Okay, I'm not hiding from anybody. My YouTube channel, I do every other Wednesday a live informational session. You should definitely attend that. And this will be in the send out to you as well on my Facebook. But this is the weekly webinar registration. So if you're not registered, let me put that in there too. Again, it's recorded, so if you can't attend, you can always listen to that recording. Oh, hold on, I didn't grab it right. Let me go back now and see if there's any questions here. Keith, so great question. He says, what platform? So I'm showing on Thinkorswim today. I also have it programmed for TradeStation. Today's special is Thinkorswim. If you're interested in TradeStation, email me, and I'm more than happy to give you that special on TradeStation as well. At that point, basically, those are the two platforms that I have it for. Okay. The YouTube is on Eastern. Yep, Eastern Standard Time. I'm in North Carolina now. But again, I record it so that if you can't attend, you get the recording, you can listen to it as you wish. Okay. So again, you can email right here if you have any questions as well. Let me put that in there for everybody. You should see the recording sometime tonight. But yeah, so any questions, any final questions on Heikin-Ashi or how I used it, let me know. Again, I wanted to purposely keep some time for that. Regardless, I wish everybody the best of luck. And, you know, again, I know being a real trader for this many years, the most difficult thing is when you're right, you try to cut those. Yeah, you try to get out as soon as you can to be right. And that's where we go wrong, because if you can maximize your profits, that's how you're really going to build those accounts. Okay. And when you can build the account, then you can put money back into, you know, some larger trades. And before you know it, you know, you can be independent. So nothing's easy, but at least it gives you basic rules, highly effective trades to be successful in this market, because we all know it can play mind games with us, right? DQ, yeah. Did you want it on the daily? So here's an example. So earnings is over now. Okay, the moving averages are kind of flat. Let me just scrunch this together for you, show you. But we were in a nice uptrend. It's had this retracement, and now we're getting green Heikin-Ashi. You know, so my only caution would be the moving averages. You know, the larger one is on top of the smaller, and we've been kind of in this downward channel. So I would be looking more probably to the short side than the long side. But from a Heikin-Ashi standpoint, if you're in the trade, stay into it now until you get a red dot. Yep. Okay. You know, these are trades where, and I teach this in my mentorship, it's not that it won't work out, because again, you're getting a Laguerre trigger, green Heikin-Ashi, but there's better ones out there, right? I mean, would you rather do DQ right now, or, you know, something like AMD? Okay, look at this triple quadruple bottom. Or what about Activision? Okay, ATVI, which has a huge seasonal move coming. So you know, you can decide based on your techniques and analysis and so forth, but yeah, I think there's better ones. Yeah, another one I was looking at this morning, let's see here. You know, Overstock has been trending up now. We got the moving average that it had with the new green Heikin-Ashi. Strong bullish sentiment there, Mike. But anyway, so yeah, so there's a lot of opportunities, you know, and again, you can use any time frame, you can trade any market, and we go from there. Oh, great, Bill. Well, that didn't take long, right? Well, I'm glad. That's good to hear. So, well, anybody, again, have a great weekend. Appreciate your time. What makes the green Heikin-Ashi turn to red? Are you talking about the dots or the actual candle? Candles. Yeah, so what happens is, again, based on the formula and the moving averages, okay, it has to do with the high and the close of the averages. So when all of a sudden it reverts, then it turns to red. Great question. Okay, so as long as it's staying green, okay, the moving averages are staying positive. And then when you get the Heikin-Ashi moving averages turning red, it's going to the downside. Okay, so it's much more smoother looking. Usually 1 day of market downturn in an uptrend isn't going to get Heikin-Ashi too bad out of shape unless it's a massive move. Okay. Oh, absolutely, Lobster. I mean, it works with all time frames because it's the same formula. Okay, so let me bring up like the 233 tick chart. Okay, and let me bring up like the NQ, the NASDAQ. Okay, take a minute to calculate that. So this is the 233 tick chart, okay? So you see when you get these solid red, that's good news, okay? So I would have waited for it to cross, right? You got yellow back to red, you know, here's a nice move. But tick charts are absolutely, they're awful fast for me, but I know a lot of you like tick charts. The cool thing is once you get into the trade, you can put your stop right above these wicks. So you might have a few stop outs, but they're low, then you know exactly how long. So if you got into this short right here, you see you didn't exit until this green dot right here, okay? That's a nice profit on the NASDAQ, okay, in a very short time frame, okay? Just as an example. But you know, then you hit the long play up here. If you got in at 606, you basically get out, you know, at 720. So it keeps you in trades and just allows you to maximize your profit. That's the biggest part of it, okay? Yeah, I can do SPY. And let me change it to 2 minutes. Let's see here. Here's 1 minute. Let me change that to 2 minutes. You can see here, this is what we wait for, right? Have that oscillator come all the way down and come back out, green dots, you know, and then again, once you're in the trade, you're just waiting for an indication to get out. Here's the red dot, which again means 2 red Heikin-Ashis. That was your move, okay? Then you get the end of the day rally, you know, same thing. You're in and then you're out. And then if you reverse, which again, I don't because it's against the moving averages. My point is if you did, you then know when to exit the trade. It tells you when to exit that trade, okay? All right, so again, if you have any questions, please reach out, folks. Again, I wish you the best regardless. I hope you have a great weekend and I'll see you on the next webinar. Take care, everybody.